So the market will always make a low before the bad news reaches a high. Let me explain what I'm talking about, and I'll use the example of the pandemic. The market fell. I'll talk about the S&P 500 in the United States. The S&P fell around about 38% over 6 weeks in February and March. And that was on the fear of what was about to potentially happen, which was the pandemic. And the stock market reached the lowest point around the world globally on the 27th of March 2020. But when it comes to the bad news, the highest point with respect to the bad news did not happen until months later. And in fact, at the very worst stage of the pandemic here in the United States, when the numbers were at their highest, the share market had actually already recovered that 38% loss. And if you can believe this, the NASDAQ was up from the lowest point, up close to 100% off the low. So it's always the case that the bad news will reach a low. The stock market will reach a low before the bad news reaches the highest point. And the same on the other way around. So with respect to a market being very, very high, the same thing will apply. So what I want you to make sure you understand, recently we saw just before the end of 2021, the share market pulled back very quickly on the news about Omicron, and then it rallied very strongly. But the actual numbers for Omicron are still going up right now, early in 2022. So keep that in mind. It should hold you in good stead over the long term to understand that even though the share market is falling in the example this morning, that the bad news may not have reached its highest point yet. And that's because the share market is generally always 3 to 6 months ahead of the real economy. Have a great day.